$5,000 a day. This. We don't have this kind of days every day, but when we have it, I'm not sure how many traders was able to take the opportunity, was able to get huge profits, just like today. This is ES from today. Almost every day this week we had amazing volatility, amazing runs. But the question is, how did you trade? The reason is, I want to create the video. I spoke a lot of traders today to ask one simple question. We had a great run today. So look at this. If you look at the move until the day today, one contract, it's almost $5,000. Just one contract, if you know how to enter and exit on the whole sell-off. If you are able to do it, you would have bagged close to this $5,000. Just one contract on ES, nothing else. But I asked the same question to a lot of traders today, and then guess what? It was surprising to see a lot of traders exited right here on this pullback, strong pullback, and then it's around 5%, and then here remaining 40% exited right here because it was consolidating right here, great down and came back. They exited, a lot of traders are exited right here and then regretted this move, and then very small percentage of the traders exited in this region, but none of them whom I called today was able to reach the absolute bottom. Okay, but here's the thing. When you say you really know trading, you need to know everything about market structure, and also one more important thing, you should know what to expect in the market manipulation. So today I'm going to show you two different ways, two best ways how you can stay in the trade longer, remove your emotions out by following simple rules of market structure, and then stay in the trade longer until the end, until the sell-off ends, okay, until the reversal. So let's get started. This is ES from today. Today I'm recording for February 27th, Thursday. So before I get started, I want to show you a few things in terms of what is market sell-off would look like, market trending look like, because I want to give a little bit of foundation first before I get to it. So first strategy, first way is skill-based, knowledge-based, and then practice-based. I'm going to show you for this one, you don't need any tool, just the knowledge of market structure and your practice again and again. So let's get started. Let's say the market is really selling off. When the market sell off, you don't expect the market to go in a straight line. Okay, don't expect the market to go in a straight line. Instead, market come down, take a base, come down, take a base, come down, take a base. They call it as, in the supply and demand world, price action, drop, base, drop, base, drop, base, and drop. This is how a pure sell-off look like. But on a typical day, it's not a really strong sell-off. On a trending lower downside trending day, you can expect market like drop, pull back, and then drop, pull back, drop, pull back, and drop. This is typical trending based. So that means it'll give you a very good pullbacks, strong pullbacks, slight pullbacks, everything. But on a sell-off, it'll just take a base, just pause, and then carry on. And then there are directional market which is still going down. That will look like in terms of come down, huge swing, come down, huge swing, come down, huge. But what if I can show you some of the rules that you can apply, you can stay in this trade, all these three conditions. Okay, are you ready? So if you are, whatever I'm going to show you, if you really enjoy it, like it's something you want to incorporate in trading, please do like our channel, and also make sure you go to the bell icon, make sure the alerts are on. Okay, so that way you can get all our videos in future. All right, let's get started. Irrespective of the market condition, I want you to know how the market structure work in the downtrend or down sell-off. In this case, I want you to understand how the market base or base works first. When the market drops in the base, market goes like this. This is what base look like. Base, it will be small movement, but it'll have a clear top boundaries. We call that as micro consolidation and then stop dropping. Okay, this is one, something like, if you can see it right here, so something like this, something like very, very small. Okay, even those cases it will do completely same thing. But when the market trending down, you can expect the market to go down and then there's a pullback and then come back down. Okay, come back down. So in this case you will see kind of small reversal, but you need to understand one thing. Every time this happens, I want you to mark down the lines. I think there are a lot of tools in the market, but you can do it yourself. What is it? So when the market coming down, I want you to draw the lines on the peaks, okay. When you draw on the peaks, what it's going to help you is that it's going to tell you the direction, breakout structure, and the change of characters. Best way is when the market drops, when there is a pullback, I want you to watch how far the pullback goes. Once you see the market start turning, draw the line. The next one, the market will, if the market still cross this particular line, the first line, the market cross this particular line, that means trend continues. Okay, this is number one. Okay, number one, first line, second line, okay, and then third line should go down. That means you're, in this case, you are still in the trade here. But next one here, it will going to create this is third, fourth. But here's where the important thing you need to note. Always expect market manipulation. What do I mean by that? Just because 3 came down, don't expect the next pullback will be lower than higher low. Sometimes the market could go back and then go to the same place as before and then come down also. That means, that's why you need to know, keep your stop here until the next swing confirmed. So don't expect the market just go down like this in a systematic way or a clear way. Market does not give you clear signals. You need to be ready to see in terms of, once you draw the line, draw this line, you expect, even though market come down, expect the market to come back here and then go down. Since it's in the same level, you're still in the short trade, keep your stop here and then let the market go. And the next level thing. So as long as you keep your stop, I want you to understand there is second level of manipulation. First one, like I told you, even after the down, it can come back to the same level and then it can still create the lower lows. Third level of manipulation is, let me clear this. Third level of manipulation, when the market come down, okay, and then like it can consolidate a little bit, and then when you see consolidation, you're going to move your stop from here to here, right? That's what you're going to typically do. So you're going to move your stop somewhere here. Market makers know by looking at the order flow. They will know there's a lot of stops building up. What will they do? They will manipulate your stop. They will take you out. How? They will go one step further, take all the stops and then drop like this. And then what will they do? They go up and then drop. So that means you expect when there is like my rule is, when the market trends down, if there is a like pullback, I keep it here, my stop, right? You keep it here. But when it come down, when the market is come back up, you expect the market manipulation here. You leave some room, little bit away. This way, even the markets, a lot of traders who kept the stop, they're going to take that stop and come down. That means your stop is not exactly near the swing high. You keep lot of room. This way, let the market maker manipulate those stops, take those stops out, it can go down. Okay, it can happen in both ways. So my request is, what I'm trying to teach is here, every time draw the line, market goes down, that means it's a clear sign that market is, this line is below this line, market is going down. If the market able to manipulate, they will come back. This is a simple way, same level, that's still okay, but manipulation happens, they'll go above your previous swing and still come down. That's why keep your stop well above. Okay, and then watch where the next swing happens. If the next swing happens right here, that means the level, this line, previous swing low here, moving up, that means you should really exit the trade. You should really exit this trade if the swing is this way. Not here, not here, when it crosses this line. Okay, when it crosses this line, you need to exit. Don't exit here, because first signal is that it created a new low and then price crossed, you exit. But if the price goes down, come back up, you draw the line, come back down, okay, and then even though it's small up, if it does not go this line, swing back down, stay in the trade. Stay in the trade. Don't keep your stops very close. That's my whole point. Don't keep your stop too close to the swing. Leave some room. That's where market manipulation happens. And then same thing. Every time there's a swing, watch how the consolidation, this consolidation where they take you out. Okay, so that means you need to make sure, find the swing, leave some room, keep it on top, and then don't emotionally attach to whatever happens in this rectangle. Do not get worried or emotionally stressed whatever happens. All I want you to know is that watch those levels, watch those lines, watch those lines. If the market goes up after the lower high, then you can exit. If not, stay in the trade. In that context, let's look this particular trade. If we entered here, okay, I'm going to draw the lines here. So line here, and then went back up. Okay, your stop is somewhere here, right? Stop is somewhere here, and then market drop down. Now it's new lower low. Now market swing up, and then you don't move your stop now because the stop is right here. The market is pull back and then cross this line. At that time you move your stop. Don't move your stop until it goes down. So now this crossed this line. That means stop from here. Stop 1. Now stop 2. Okay, 2 is terrible writing. All right, and then goes down. Draw the line just to make sure, and then swing up, and then you can see goes down. That means you move your stop right here. Leave some room for market manipulation. Look at this. If you'd have kept your stop right here, I think if you kept right here, what happens? They would have taken you out. So don't do that. Keep some room away, and then look at this. Like I told you, like consolidation, a lot of traders exited here. They thought the run is over, but this level was held. Keep a stop a little bit, leave some room for the manipulation. If you keep your stop here, what happens? Look at this. This is the lowest low, right? Ignore this one because this is a little bit higher. You had this level, 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 this level. This one doesn't count because it's above. So now this level and then this level. Now this level is held. Your stop is somewhere here. Now market went back down, creating new lower low. Keep it down. Now don't move your stop yet. I know the market is pulled back and then going down. Don't move your stop yet until it crossed this level. It crossed down. Now you move your stop. Move your stop right here. Don't move your stop until this cross this level. Move your stop here and don't put it right here. Give some room. Why? Market can come back to the same level. Don't forget that market will come back to the same level. Even sometimes it will go even further to take you out. Keep it there. Ignore everything, whatever happens emotionally. Just don't focus on those things. You draw your levels. Okay, and then you kept your stop. Market now even moved further. Now move your stop from here to here. Now what happens? Pull back, and then market up, coming down. Don't move your stop yet. Stop it. Now you can move your stop. Now you can move your stop. Look, it's 3 p.m. Central Time. Market close. You got it right here. I'm not sure how many of you got what I'm trying to say. It's just a simple rules of market manipulations. My point is, every time there is a consolidation happens, market gets in a consolidation, don't expect to be like exactly go above here, touch here, touch here, touch. Don't expect that. I want you to expect when the market is consolidating, market makers are in control. They can manipulate the price movements. That means moment you see a lot of traders, moment they see 2 swings, right? Oh my God, that's rejected once, twice. I'm going to keep your stop. I'm fine. My trade is safe. Hell not. Why? Moment they create these 2 swings intentionally to make you to put your stop right there. What will they do next? They will make sure they go back up, take all your stops, and then come back down. This is the most important learning. That means every time there is this consolidation, make sure what are the highs. What are the highs? Keep it right there. Let's say one more thing. In this case, somebody can ask me in the last time I was teaching you. So consolidation, right? So you like I mentioned, this is the swing. You're going to leave some room. You kept your stop here, not here, a little bit out. What if the price came back up and then down? What are you going to do with the stop? Now it's very close to this one. I wanted a little bit, adjust a little bit, some more room. Why? Now you can go even further to manipulate. I want you to watch these swings. Is it going even further down to make sure the range is widening? That means you're still in the trade. So that's what I want you to watch. Watch more and more. You watch the market manipulation, you'll be able to trade fine. So again, if you follow this, you'll be able to stay in the trade. This $5,000 trade in one contract today on ES February 27th. Okay. And also one more thing I want to talk to you about the entry. So we talked about the staying in the trade, right? And in terms of those things, but in this case, look at this particular move. Let's say you entered the trade somewhere here, right? That means here the swing happens low. This is where the last swing. That means here is the next swing. That means you're going to leave some room. You're going to leave the stop right here, right? That means go down, come back to the same place. Still, you're fine. You're fine. Go up, and then it came to the same place. Don't move your stop yet. Keep the stop right here. And then now it moves further. That means now you move your stop right here. Not exactly. You're going to leave some space. Leave some space. Leave it here. And then come back here. It's clearly taking lower high. Lower high. Lower high. That means the moment it crosses, you're going to move your stop right here. Right? Look at this. Even manipulation happened once, twice, then it goes up. But you could exit right here. But whole point is expect price come back to the same level or even take you out. That means leave some space in the swing and also watch these highest and higher lows clearly, and then look for the consolidation, pullbacks, everything clearly. Don't get deceived by these huge swings, and then more time the consolidation happens, a lot of traders panic. If you use this rule, doesn't matter it's like a couple of bars or like a 10, 15, 20 bars consolidations, keep your stop right there, solid. You know the rules, you know the market conditions, you'll stay in your trade. Okay. And also one more thing I wanted to add before. Okay, all this time I'm showing the one way. I told you I'm going to show two ways, right? This is just one way. All you need is skill, practice, all those things. And also when the market reverses, I want you to watch. Okay, so when the market, most of the time, this won't happen. This happens. That means the lower highs and lower lows will turn into opposite. So this is where you can see. In this case, you can see the real consolidation happens, right? So lower high, lower low, lower high, lower low. This is where you could have. My entry was here. The reason is that I'll show you why I took the trade in the next screen. But if you don't have the special tools, your entry should be here. Okay, why? You can see this is the level. It was held and manipulated, manipulated. This is the level, but this is the level it pulled back and rejected. So this is where your entry should be. Your stop should be here. You could have entered right here, and then you could have held the whole time. Okay, are you guys with me? If you have any questions on this one, please go to the comments of the video. Type it. Type what you need, which point you need a clarity, anything that I can help. And also, if you like it, please like this video and share it. Also put some comment. I wanted to hear, is it helpful or it's a garbage? If you don't like it, please put some comments so that I know how you able to either enjoy the video or it's a waste of time for you. Okay, I'm going to show you the second way. Second way is using the level 2 order flow. Irrespective of all the skilled way of managing your trade, best way for me to look at is that order flow, because order flow is going to tell you the same information what market makers are looking. Market makers are remember I told you when the market moves up, there are a lot of stops here. Market makers try to go try to take your stops and then go down. Remember that? How do they know? Because it's in the level 2 order flow. Even they have advanced level 2 plus or level 3, whatever it is. But all the retail traders have access to level 2. That means we can see all the pending orders in level 2, passive limit orders sitting in the market, order blocks. That means you can see not only your stop, everybody's stop, how many contracts sitting here in the passive limit orders. Anytime you place your stop, that's the limit order. Limit order that goes to the exchange, and then all the traders can see it. You can see it through level 2. Okay, so let's look at it. I'm going to show you same thing with our tool BST liquidity zones. All it does is it takes the level 2 data and then look at the limit orders, constant data limit orders, persistent, constant. We have algorithm. I don't want to explain what it is, but the bottom line is it looks at the order flow and then trying to find out where all the stops or targets are concentrated in the order flow. So in this case, the reason, remember I told, in this case, we have something called sliders. That means now you can decrease to find even the micro liquidities also, small liquidity blocks also. If you wanted to see more concentrated, you can see. But in this case, what I'm going to do, I'm going to lower it down. Okay, lower it down because if you by default you will see in terms of this lot of blanks here. That means doesn't mean we have no order blocks here, no order blocks here, no block. There are order blocks, that's small ones. So to see the in detail, I'm going to dial it down. Okay, dial it down a little bit because this is for trade management. Okay, first thing you need to notice is that, remember I told you, I'll show you why I took the trade way early, because moment the price went up, once it hits here, look at amount of sellers started coming in here. My God, the amount of sellers started coming in, price could not move further. It held for such a long time. I know that this is where my entry should be. I kept my stop way above all the stop orders. So that's a different story, but I'm here to talk about the second best way how you can stay in the trade longer without getting stopped out or without getting emotionally frustrated and then exit the trade. So here it is showing all the stops. Remember that I told you every swing back there's a lot of stops, a lot of traders place stops. These are the stops. These are the passive limit orders sitting in the market. Right? That means I can even dial it down to see more levels, or I can see the 100. In this case, every time you don't have to draw the line, you don't have to look at the swings, all the things. All you have to do is just use these lines. When the market moves, you enter the trade, keep your stop a couple of sticks above. Once you see the next red line, move your stop here. Okay, now you see the new line, move your stop. Trail these lines, That's what my point is. Because look at this one. This is the fascinating one. Look at the swing here. Where are the most concentrated stops? Right here. Look at how much gap. All right, how much gap. This is why if you don't know the liquidity, you're going to keep a stop right here and then get stopped out. Right. So that's why you need to know where are the highest concentrated stops are, and then you can hide your stop behind these other trader stops. So you're going to trail the stop. While the market was consolidating, all the manipulation happens, you kept your stop with emotionless right here. Look at here, while it's going on, new set of orders coming in. Look at what happened. Same time, market drops. What are you going to do? You see that new red line, move your stop here, trail your stop here, trail your stop. In this case, from here, almost the whole time, you're going to keep your stop right here. You're going to keep your stop, just wait. What happened? It is making all these moves. You are having a patience to stay in the trade here, and then once it drops down further, you see the next red line forms. From here, you're going to move your stop right here. Again with the moves, move right here, drop right here. This is where you would exit it because end of the market. So this is what I'm calling professional tools, looking at the order flow where you can make sure you stay in the trade longer. But I would rather both manual way, market structure knowledge, know the manipulations, everything, and also use the order flow. Okay, so both ways. This way you will not emotionally destroyed, and then you'll be staying in the trade longer. Again, make sure you know the market structure, you know the market manipulation possibilities, you know the rules that you need to follow, irrespective of how long the consolidation happens, how long the base happens, how deep the manipulation happens. Make sure you follow your rules, stay in the trade longer, and then have a good day. I think this is one of those things. This week is amazing for me in terms of volatility, what we had so far in the trade this week. Hope you enjoyed this video. If you wanted to more small tips and strategies that you want to follow in your trade, please put your comment and also join the channel. Hope you guys have a great day. Thank you so much. This is Rob from BuySide Global.